Hello, traders. This is your trader's friend. Thank you for joining me today for another video. I'm so glad you've taken time to be with me. Guys, today I'd like to talk to you about bull traps and bear traps. Now, what are market traps? Market traps occur when price goes against the trend and then price continues on in the direction of the trend. Now, as traders, we act like it's a strange thing when we get trapped in the market. Why? These people are professional trappers. They lead us into these traps. So, what can we do when we get trapped? We got one or two choices. We can either spring the trap and allow us to experience the minimum amount of pain, or we can allow them to squash us. Today, I'd like to talk to you about ways of minimizing getting trapped, and it's really this simple. In a downtrend, you want to sell the highs. Why? Because you are a savvy trader looking to maximize your profit. In an uptrend, you want to buy the lows because you're also a bargain shopper looking to buy low and sell high. Today we're going to talk about the Euro USD on the daily time frame. And the reason we're going to talk about this is because so many people trade it. Now let's blow this chart up a little bit. As long as price is below your moving averages, you are looking to sell the high every day. Now you can see you get many false signals in this bearish trend. However, it is most of them are below your moving averages. Now I thought this one was really interesting because here you have a break above the 50, but there's some things that are noteworthy about this. One, price isn't able to sustain the momentum, but also look at where you have the 200 period. Now the 200 period is also acting as resistance, as is this 50 period. Let's go ahead and blow the chart up a little bit from there. Okay, again you get the break above the 50, way far from the 200. Price falls down below this, but it also breaks a previous area of support, which is further confirmation that you are looking to sell the highs. Now, you have these reversal signals, however, they are below these moving averages. And another reason that these are not as significant for me is because this is at the beginning of the trend. Now, these are reversal signals that I really pay attention to simply because we are further along in the trend and the trend is a little bit older. These are pretty strong signals. The thing about these, though, two things: they are below the moving average, and also they have no confirming candle to confirm the reversal. Now let's continue on with this chart. Now I've moved this chart a little bit, and you can see here this is a reversal that's significant. The reason this reversal is so much more significant than the other two is because you're getting a bounce off of that monthly time frame. This is actually a trend line from the monthly time frame. Also, you have a strong reversal signal followed by a bullish engulfing pattern. Now, what is this engulfing? It's engulfing the price action of the two previous candles. Okay, and on the bullish side of this, as long as price is above your moving averages, you want to buy the low. And I'll tell you guys, in real life, I mean, I'm saying this and we're looking at past price action, but when you're doing this in real life, it gets kind of scary because you've seen price fall maybe 50, 60, 100 plus pips, and you're scared to get in it. But again, as long as price is above those moving averages, you are looking to buy the low. Now, when I saw this reversal in real life, the truth is I certainly did not expect this much price action simply because we were still bearish on the monthly time frame. I'll explain a little bit about these lines in a minute. But this was really significant because we got price action that ran up to the 200 SMA, and then you got a rejection, which made for a pretty good little bearish run. However, it was a great bearish trap. It was the market's way of saying, hey, bears, we hadn't forgotten about you. See, we're going to let price drop. Now, it allowed price to drop hard enough for you to get comfortable there. You got to break below the 50, but then price just kind of got in this little range where this became an area of support before price again reversed back in favor of the original trend. Now, I've brought this to show you something that I think is significant. Once price starts breaking into your moving averages, it shows that the other side is starting to gain strength in the market. Now, once price reaches that 200 SMA, then you know that's a significant amount of strength in the market. You get a little fallback and price continues on in a bullish fashion because you can see back here this strong show of strength. But once that happens, guys, we are looking to buy the lows. Every day we are looking to buy the lows right until we get a profit that we're comfortable with and go ahead and get out of the market and enjoy the rest of our day. Okay, guys, I said I would explain what some of these lines are. The green lines are coming from the monthly time frame. This is an area of support. The black lines are trend lines on the daily time frame. This pink one is kind of an intermediate thing when I'm trading on a smaller time frame. The yellow, the yellow ones are from the 1 minute time frame. I removed quite a bit of those. Now this was significant because this was an area of resistance from April of this year, and you can see we've broken above that. Now this thick red line is the next area of resistance that I'm expecting. Now, guys, I've been trading long enough to let you know that the advice I'm giving you tonight is really good advice. But I'll tell you, I don't always take my own advice because I'm so smart I can outthink the market. Let me show you a trade that I took the other day. Now, I actually took this trade on the 1 minute time frame. However, I'm going to show it to you on the 1 hour time frame. And you can see, let me blow that up a little bit for you. Now, because I'm so much smarter than the market, on the 1 minute time frame, you can see I was going to take a quick scalp. And look at what happened. Price just kissed my take profit. Came back the next hour, it hit it again. So I'm sure that price is going to go ahead and hit that take profit and close out. It did not. Guys, that is the dangerous thing about trading against a trend. And let me say, if you're shorting the market and you keep getting stopped out, then it's probably time for you to start thinking about going long. I don't care what your candlestick signals say. Your biggest advantage is going to come with going with the trend. You can see this teeny tiny scalp that I was trying to get the other day, and it's really a tiny position. That's why I'm not worried about it. But yeah, that's the thing that's so dangerous about going against the market. I want to give you a quick look at the monthly time frame. You can see here that we are making lower highs, but you can also see where price bounced off of that trend line from 2001. So this is where we are currently in the market, and price is right here at that 50 period SMA. So it's going to be very interesting to see what goes on. That's another thing that kind of emboldened me to take that short. I switched charts and confused myself along with this resistance from April. Guys, these are the things I want to leave you with. Don't be a bear, don't be a bull. Just follow price action because as you can see, your moving averages do. This is what you want to look for in a trending market. If your market is trending, you want to, and if price is below your moving average in a downtrend, you want to sell the highs. When price is trending up, you are looking to buy the lows. Guys, you can absolutely do this. Yes, you can be successful at Forex. Have a terrific trading week.